everyone, and welcome to Bluestone Resources Live Summit today, hosted by Six. We're joined today by President and CEO Jack Lundin and Stephen Williams, Vice President, Corporate Development and Investor Relations. Jack's going to walk us through a company presentation, and then we will be accepting questions live. So as a reminder, you can submit questions at any time on the Q&A panel on the right-hand side of the screen, and we'll try to get to them after the presentation. And as always, the summit is recorded and will be available to watch afterwards on Six.com. But without any further ado, I'll hand it over to you, Jack, to kick things off.
Thank you very much, Dasha. It's an honor to be able to present Bluestone Resources and specifically our flagship Cerro Blanco gold project located in southern Guatemala. We've got some very exciting feasibility study results that were announced on Tuesday this week. And so the plan today is to go through this corporate presentation and spend time on the results of the feasibility study. And as Dasha mentioned, there's time at the end to answer some questions that some of the audience may have. So bear with me until the end of this presentation, and then at the end, I'll get to some questions. I will be making forward-looking statements, so I encourage the audience to go onto our corporate website, and you're able to read the forward-looking statements as well as any cautionary notes on our corporate website. So at a high level, what are we looking at here with Cerro Blanco? We have a very unique asset located in southern Guatemala. We recently pivoted just over a year ago to a new development concept for this asset where it was previously contemplated as an underground development scenario. However, with the success that we had in drilling and our interpretation of this deposit, we're now looking at a much larger project, larger scale operation with about 3.1 million ounces of gold and over 10 million ounces of silver in the resource. This asset is now capable of producing over 300,000 ounces of gold per year and over 1 million ounces of silver per year at an all-in sustaining cost in the first quartile of the industry. So very robust numbers on this Cerro Blanco project, and that's why we're so excited to move it forward. However, before getting into the results on the specifics of this project, it's really important for us as representatives of this company, Canadian-based junior gold developer, that our commitment with Bluestone Resources is to Guatemala. We look for opportunities in the country, and we focus on responsible resource development and creating shared benefits to the people of Guatemala. And we do that through training, education, and capacity building with our partners, the Lundin Foundation, to ensure that everything that we do in Guatemala is with consultation with the people in the country to ensure that we're maximizing the opportunities in the area of influence where the project is located. A couple highlight numbers: we're going to have direct employment of over 1,100 people during the construction phase, and that will balance out at around 500 people during the operations phase once we're producing. And now if you look at the right-hand area of this slide, you'll see that there's about $300 million US in economic contributions through taxes and royalties over the life of the project. So this will be a significant economic contributor to Guatemala, and we're very excited and proud to be advancing this project in partnership with the host nation. About average annually, 160 million contributions in terms of energy, labor, materials, supplies. Those are direct contributions that equal about 1.8 billion US dollars over the life of the project. So again, very, very meaningful impact. We have a very strong focus on doing this project in a sustainable manner, and we believe that we've got the right people in place to train, educate, employ, and build capacity in Guatemala. So now to the highlights of the feasibility study. I'll walk you through these key numbers here, starting on the left-hand side. The initial capex that we're contemplating on this project is around 570 million US dollars at an all-in sustaining cost of $630 an ounce. I'll get into the details of those numbers in later slides. But the life of mine capex, so when you include sustaining capital and $40 million of closure costs, is around 750 million US dollars. Now in the center of the slide here, what you can see is our average head grade in the first 10 years of production will be about 2 grams per ton, which makes this a very high grade open pit project. The peak production, which you'll see later, is close to 350,000 ounces of gold per year. And over the life of this project, we are contemplating a resource or a reserve life recoverable of about 2.6 million ounces of gold. To the right here, you can see the economic returns. So 1 billion US in after-tax NPV at a 5% discount. That translates to a 30% IRR and a rapid payback of about 2.2 years. So some of you may be familiar with the project and the story. About 1 year ago, we announced a preliminary economic assessment, so a less detailed study that showed the capex of this project around 550 million, which you can see on the left-hand side of this bar chart here. So I think it's important for those that have followed the story to understand how we get from 550 million US to now about 570 million US through our detailed and advanced studies and optimization work that we did over the past year. So the biggest savings that we noticed here, that we were able to achieve, was really a feat of our mining engineering team, able to optimize the pit and therefore justify reducing the size of the processing facility by 20%. In doing that, we saved about 20 million US dollars. But there were obviously offsets. Over the past year, we've seen a lot of inflation, we've seen supply chains disrupted, and we've seen material pricing and energy costs going up. So we've noticed those in our water treatment area, as well as advanced engineering work that makes sure we have the most robust water and infrastructure systems in place to make sure that we're sustainably building and operating this operation. So you can see water treatment, infrastructure, and freight and inflation have all increased across the board. However, there has been additional savings in areas such as construction indirects, so engineers that we can supplement with a Guatemalan workforce rather than expat loading. And contingency has also gone down because with the more detailed engineering, we have more certainty on the cost of this project. Our owner cost has increased because we have now implemented a camp where we will have our expats living at the project site, calling it their home during the construction and operations, which allows for us to have a more efficient and safer operation. So all in all, we've walked from 550 million to 570 million for the initial capex number. Additionally, the ramp-up period is about 5 months as compared to the PEA, which was contemplated at 2 months. Now touching on the operating cost. So we've got 2 pie charts here, and I'll start on the left-hand side of this slide, and you can see our operating cost on $1 per ton milled. So walking through some of these numbers, our G&A of about $3.40 per ton. So these are all the general service departments: health and safety, environment, human resources, security, all of those departments that are working to support the mining and processing operation comes in at around $3.40 per ton. Mining, you look at these 2 numbers here, $10.40 per ton milled. However, that's just pure milling cost. So normally what we do is we look at mining at $1 per ton mined, and that's less because we're moving more material from the pit than we're actually producing. So that's at about $2.50 per ton. Processing, so this includes everything to manage the processing complex as well as the filter plant. We have a dry stack tailings impoundment concept here, so we will not be employing a traditional tailings dam. We are minimizing our footprint and managing our water in a more sustainable manner, and therefore we will be using a dry stack tailings rather than traditional tailings, aqueous tailings impoundment. And so that's about $13 per ton. And then lastly, site services. So this is the camp, catering, and about half of that $3 or $2.70 is associated to our robust water management plan and our water management strategy. So about $1.50 per ton is associated to dewatering and water treatment. Over on the right, you can see the all-in sustaining cost buildup. So I won't spend too much time here, but what you can see is very competitive pricing due to the high-grade nature of this deposit. And therefore, we're looking at a first quartile in our industry all-in sustaining cost of about $630 an ounce of gold payable. So, very, very attractive, low-cost operations here on this project. A little bit on our mining and processing. So this is a conventional open pit mining project that we are contemplating here at Cerro Blanco. Truck and shovel utilizing 90-ton haul trucks. We were able to optimize the pit design and increase the size of our haul trucks, going from 60 tons to 90 tons. that means we've been able to increase our mining rate, and therefore that's how we were able to justify reducing the size of the processing facility by 20% and increasing our mining rate. So very good job done by the mining engineers in our team to optimize this pit design, and we'll continue to work to optimize this. But we're really pleased with how the plant is looking, and it's a traditional processing facility with crush, grind, leach, and CIP tanks to produce 100% doré bars. So no concentrate will be produced. Key statistics here: it is a 14-year mine life, 10 years of mining, but 14 years of mill feed. Total material to be moved is about 200 million tons, ore to be processed is about 54 million tons. And then the rest of these numbers here you can look at on our website. But really, I think the big indicator here, the success that we also had with our metallurgical program, where you can see gold recoveries are at about 93%. So very high recoveries, which means that we're utilizing this ore and making sure that we can maximize the gold to be produced and silver out of this deposit. So here's a picture of the block model in situ and the open pit design around it. What you can see is that this is a tightly held deposit, so high grade in nature, and therefore the resource is contained in a small space. The final dimensions of the pit will be about 1,100 meters north to south and 600 meters east to west. You can also see a small satellite pit to the northeast in this picture that shows other potential opportunities for high-grade, shallow feeder pits to continue feeding the mill longer than a 14-year mine life. And that's a big opportunity for us to extend this project and keep the mine life longer than 14 years. So this is a 3D rendering of our processing facility, and I'll walk you through the flow sheet, starting from the jaw crusher to the top right of this slide here. And then it goes to our coarse ore stockpile before being fed into the grinding building, where we have a SAG and ball mill that will then grind the material down to a finite size. And then it goes into the leaching and CIP area to extract the gold material, and then into the gold room to produce 100% doré bars. So this is a simple flow sheet, very tight as well. It's from an operability standpoint, it's going to be a really nice plant to operate. And at the end here, what you can see, which is different to most conventional processing facilities, is that we have a filtration plant to dehydrate the tails and ensure that the water is being recycled through back into the operation. So very robust, innovative solutions here being used at this mineral processing complex. And that puts us at the forefront in terms of innovative and technological advancements on this project. So I don't want to get too technical, but I think it's really important for everybody to understand that our commitment to operational and excellence and our performance from a water management and tailings management standpoint is of utmost importance. And so we do have a sophisticated dewatering and water treatment system designed, and also our tailings, as I mentioned, a dry stack tailings rather than a conventional aqueous tails concept, will really put us in the forefront of responsible mining practices being adopted for the future of sustainable mining globally. And that's a focus for us with Bluestone Resources and, of course, with the Lundin Group as we continue to move projects forward in frontier regions. So here's a slide that shows really and demonstrates the robustness of this project. This shows the production over the life of the mine. And there's some key highlight numbers here on the top. So walking you through from the left to the right, we can see an average annual production over these 10 years of mining is about 240,000 ounces of gold per year. At a $1,600 an ounce gold price, we're going to be generating close to $230 million US per year in free cash flow. And I've already talked about our low operating costs, but that's really the key to making this such a robust project. You can see on this bar chart here our production profile. So we do get into the high grade zone early. Therefore, we're able to have our peak years in 1, 2, 3, and 4, and therefore really generate a rapid payback for this project, which gives us the opportunity to use those funds to continue to improve our asset or look for other opportunities in the region. You can also see here per year our all-in sustaining cost assumptions. or our all-in sustaining cost results. And you can see during those peak years, we're actually moving into the first decile in terms of operating costs. So very exciting, very attractive numbers, and we're very proud of what this project can generate. So this slide here shows how we're leveraged to the gold price. We ran our economics at about $1,600 an ounce gold and $20 an ounce silver. But what you can see, where gold price is today, over $1,900 an ounce, if you put those metrics into our economic model, you can see that we're generating very significant returns. And of course, the payback period is even quicker. Our NPV goes from about 1 billion up to 1.7 billion at $2,000 an ounce, which doesn't seem out of the question given the global economy and where things are heading in the world today. So we are very bullish on the gold price, and we believe that this project stacks up very well amongst our peers. And even in a low price environment, it's still a very robust project. This slide shows how we stack up against some of our peers. So what this shows is that Cerro Blanco is one of the highest grade open pit development projects, capable of producing over 300,000 ounces of gold a year at first quartile operating costs. And you can see that on this chart here. The y-axis is showing the all-in sustaining cost, and the x-axis is showing the head grade. So you can see that we do stand out amongst our peers because of the deposit, the richness of it, the near surface nature, and the geometry of the deposit. It's very amenable to surface mining methods, and therefore you can see that when you compare the underground feasibility study for Cerro Blanco that was released in 2019 to the feasibility study for the open pit that was just released on Tuesday this week. So where do we go from here? Some near-term catalysts for us. We will have a lot of exciting news to be able to present to the market this year as compared to last year, where we were really focusing on understanding the project, improving our community engagement, and really focusing in on de-risking the project. Whereas now we've got some key activities that will be kicking off in the year, starting with the construction of a new bridge that will bring 7 villages plus the Cerro Blanco project to the town of Asunción Mita. That is a town of about 16,000 people. So that bridge construction, we are permitted. We are waiting for our construction license, and that's able to kick off as soon as March in this year. Project engineering as well. We're moving into the detailed engineering phase now, and we're proud to be working with G Mining Services again. We worked with them at Fruta del Norte on the Lundin Gold project down in southern Ecuador. So we're looking to replicate that success here through project engineering and construction. And then, of course, our permit process. We did have to submit an amendment to our existing environmental license. We submitted that application in November of 2021, so just several months ago. And we are working with the authorities to ensure that we have an efficient review and clarification period. And we anticipate that we'll be able to receive our permit approvals to keep moving the project forward in Q4 of this year. And that puts us in a position to start the pre-development or early works campaign towards the end of this year, and in 2023 getting into full construction mobilization. So very busy on the work front. A lot of activities are already kicked off and some new ones to be initiated this year. And of course, everything in parallel is focused for us to be able to get our project financing. So we have a financing strategy in place for the Cerro Blanco project. We're contemplating traditional debt facility, potentially a silver stream on our silver production, because we do have meaningful silver resources that will be produced here. And then, of course, any equity overhang that will be needed to keep the project moving forward. One exciting fact, though, is that this is a Lundin Group company, and therefore my family is committed to advancing this project and minimizing shareholder dilution. So we do have a line of credit open to bridge any funding gaps that may arise. We've got about $15 million in the bank today, so we are comfortably funded to get through the next several months. Before I go to the Q&A section, a very unique opportunity for us as well at Cerro Blanco, or in the Cerro Blanco region, is with our Mita Geothermal project. So we are licensed to generate up to 50 megawatts of renewable energy through our geothermal plant. This is a project that we will look to advance once we're in the construction phase, And really what this does is it provides us the opportunity to offset some of the power requirements that we will be taking from the national grid, and also to generate renewable energy that we could sell into the privatized grid in Guatemala. And I think that for us is a very unique opportunity, because we are so focused on sustainable development and minimizing our environmental impact, that having a gold project adjacent to a geothermal project really does provide a unique opportunity for us at Bluestone Resources with our Cerro Blanco project. We are in a hot springs environment, so this area is very amenable to offering potential opportunities to produce renewable energy. So that's it for the main part of the presentation. I do want to open up the floor to questions, and I think you can just type them in and on the right here, and I'll start reading some off, and I'll be able to answer as many as I can get to over the next 10 to 15 minutes. So one question that I'm getting is, are there any flaws, possible volcanic activity that could impact the project? So that's a great question. It is a hot springs environment, and so of course we do have high temperatures. However, with the open pit and the way in which we understand the deposit, we have understood where hot water inflows will be coming from. High temperature water is localized to certain areas of the deposit, and therefore we have a strategy to ensure when we are in the hot water environments, we will be using things such as high temperature explosives, and of course making sure that we dewater the mine sufficiently so that we're not in any risk for our personnel or for the operation itself. One question I'm getting as well is on exploration upside. So we definitely do have some exploration upside. There is a 2-kilometer mineralization trend that goes south from starting with the Cerro Blanco deposit and moving to the north. So we will look at putting an exploration package in place as we advance the project. And I think, there is some serious upside potential and some significant opportunities to add resources through future satellite pits. You can see on this slide here that there already is one satellite pit that's made its way into our mine life. And we believe that there's other opportunities further to the north in this region. Getting one question on our training and capacity building programs that demonstrates our commitment to Guatemala. So that's a great question. Fortunately for us, we were able in 2006 to create what's called the Lundin Foundation, which really comes in alongside the mining companies and helps us build capacity and develop a relationship and develop a strong reputation with the local communities in which these resource projects are located. So our first focus is to ensure that we can help facilitate education and training so that there are opportunities for the people in the region to work at the project, because our end goal is to have this operation ran 100% by local Guatemalan personnel. As well, we also have an economic diversification campaign that we've just kicked off now, because the reality is we won't be able to employ everybody from the area of influence. However, there is no reason why other industries shouldn't be able to thrive alongside the mine as we continue to advance this project. Another question I'm getting regarding carbon credits because of the geothermal project and energy plan. So I think that there is a significant opportunity there, and we will explore that further. The fact that we will be looking to advance a geothermal or renewable energy project in parallel with a gold mining project, I think it does give us the opportunity to attract more favorable terms on funding and potentially get carbon credits as we're in operations through our renewable energy generation. Another question regarding financing. So what type of financing would we prefer? So being a single asset company and looking for Cerro Blanco project financing on this specific project, we're looking to see how much, how sizable of a debt facility that we could get. We're targeting around 60% debt. I think we could look at getting potentially 100 to 150 million in a silver stream. And then, of course, when the time is right, if we had any equity overhang, we could go to the markets and raise some money there. Another question about M&A activity for Bluestone Resources, and are we open to receiving any M&A? So, right now we're focused on advancing this project as a single asset developer. We are, of course, obligated to ensure that we're looking out for the interests of our shareholders, and so therefore we are open to discussing with peers and looking at other opportunities out there. However, right now we see that the best way to create value for this company and this project is for us to bring it from the phase that it's in today, so advanced pre-development phase, into operations. And we think we can do that in about 3 to 4 years from now, get ourselves into commercial operations, and therefore be generating significant returns for our shareholders, our local stakeholders, and our national stakeholders in Guatemala. When is full production expected? So right now our project timeline has us starting construction, construction mobilization in about Q1, Q2 next year. And we believe that we can get ourselves into first gold or first production by the end of 2024, and then commercial operations in Q1 or Q2 of 2025. Just looking through, there's several questions that have been asked just in different ways. Okay, so there's a question out as well on the on this slide that I'm showing right here, where the processing facility will be located in relation to where this pit is located. So we have not put the permanent infrastructure renderings on this image. However, what you can see here is there's already existing infrastructure in place, because Goldcorp, that was the previous owner of Cerro Blanco, did develop underground workings and also put in already a water treatment facility and admin buildings and a truck shop. So you can see that here. Our processing facility is going to be going to the east of the project, as well as our camp and other permanent infrastructure. So it is tightly held we're trying to minimize the footprint, and everything in terms of infrastructure to support the mining operation will be to the east. We're getting some questions on the permitting process in Guatemala and how we see that will proceed. So we do have a really good understanding of the permitting process in Guatemala. As I mentioned, we're going to be starting construction on a new bridge, which is going to be a key piece of infrastructure for us. And that bridge did require a new EIA. So we went through the process of collecting baseline data and then submitted an application for a new EIA on that bridge. We did receive an approval for that in January. And now we're looking at getting our construction license to start building that bridge in March and April of this year. So that was one efficient process that we were able to see, the way in which the document or the application moves through the government. And it was pleasing for us to see that it was an efficient process. Of course, with our permanent amendment application for the Cerro Blanco project, that's a much bigger document. We spent over a year collecting environmental and social baseline data and put together a very comprehensive document to outline our mitigation plans for this project, and therefore that will take a longer period to review. However, we believe that because we submitted the document in November of 2021, that by Q3, Q4 of this year, we should get a response, and we're hoping that it will be an approval, and we'll have indications throughout the year as we go through our clarification process and as we host some of the authorities to the project site to answer any other further questions that they may have. So we fully understand the process. This project has been around for many years. It already has an EIA that exists. Goldcorp was able to get an EIA approved for the underground in 2007. And of course, we're amending that now. But throughout that period, there were several amendments that were needed, and those were all achieved because the documents and supporting documents were justified, and therefore the Guatemalan authorities did grant approval for those. Question on the type of mining. So this is going to be the development approach here is similar to what we did at Fruta del Norte with Lundin Gold, where we did an owner team approach. So G Mining will work with us. We will also have an owner mine team as well. So we're going to be training our workforce and employing our workforce rather than doing a traditional contracted arrangement, because we believe that we have the capabilities to train and hire locally, and therefore our focus is to really put the right training programs in place so that we can develop the skill sets required to mine out this project, to operate this project in the highest economic, environmental, and social standards in the industry. Okay, I think that's it for questions. Stephen and Dasha, if you're still on the line, and I think that that will probably wrap it up. There's maybe one more question just related to the all-in sustaining cost on a silver stream. That's a very good question, because our all-in sustaining cost of about $630 an ounce does include that is net of silver byproduct credits. So that's about $80 an ounce. So that could move our all-in sustaining cost to around $700 or just over $700 an ounce. That still keeps us well within the first quartile of operating costs. And you can again see that in this slide here, the robust nature of this project, because it's a near surface high grade deposit. There are not too many deposits out there in the world today that haven't already been mined out. Okay, well, thank you very much for everybody that attended this call today. It's a pleasure to be able to present this exciting project, and Bluestone Resources will be the company with the team to advance this project in the right manner as we move this project forward through development and into operations